Hello and welcome back to another episode of Fintech Focus TV with me, Toby. We are revisiting again today, and we go back to Philip Miller at Solidatus, who we spoke to last summer in the height of August. And plenty has happened since then, both in the world and for the business. It is an absolute pleasure to welcome you back to the show. Philip, how are you?
I'm very well, Tony. Thank you for asking. Hope you're getting on well too.
Absolutely. Yeah, it's as I say, lots passed over the bridge in the last 6-7 months or so. But I'm delighted to say that most of it has been very positive, and also very pleased to hear about a lot of news coming out of your business. We'll move into that in a second, but just to revisit it, give us a little bit of background to Solidatus and yourself, if you would.
Sure. So I'm Philip. I'm now called co-CEO. So there are two Philips at the company, and
not co-Philipping.
No, we're not co-Phils or co-Philipping. We're co-CEO. We're known as the two Phils now. It's kind of in the vernacular of the company. Founder as well at Solidatus, and our angle it still is, and as it was in the summer last year, we were trying to make data a better place. So we're trying to help people use their data in an efficient way, reusable way, return on investment way, and genuinely trying to be sort of a catalyst for a good disruptive change in looking after companies' intellectual property.
Yeah, and I think and we mentioned this last time, that it is an area which we've seen real value rate or the value rise significantly over the last year in particular. Data has always been, one of those sort of core areas of opportunity over the last few years, but this has almost accelerated everything around that. And I've loved to see stories of growth all the way through. I think at the sort of summer of last year, the story was one of exceptional growth for your business. It was headcounts continuing to grow through the pandemic. It was business continuing to grow as you move into various different areas as well, from fintech to areas outside the space at the same time. And I thought it was really encouraging and uplifting to hear that last summer, and to see good news stories. I think through the spring, Q2, start of Q3, it was difficult as we started to see things lifting. More companies got there, but it was a continuous journey of success for yourself and the business. I know how hard you worked to do that. One of the things I think that's really interesting for me is and there's been some big press around what you've done over the last couple of months, a Series A raise thrown into the middle of that. Now I'm seeing the doors open a little bit on investment and companies who are raising at the moment. I know how difficult that is at the best of times. I can only imagine how challenging it is during these times at the same sort of space. So I really wanted to get a little bit more color and journey on that, and for you to talk through that, because it's been, as I say, some great press, some big names attached to it. And I love to see it, and it's probably testament to everything that you've been able to achieve over the last 12 months to see that sort of thing come through. But tell us a little bit about the process and the journey on Series A for you.
Well, I mean, I don't know what normal is with this, I have to say. So I remember going to some conferences just to sort of not even to dip the toe in, but because you wanted to see how the process of VCs worked. And I remember going and talking to people, and you'd hear stories like, I've approached like good technology, right? So people had good technology. I approached 30 or 40 VCs. We've done so many presentations. We've got one offer. And actually, for us, the very thought that we would have raised 2 years ago would probably have been something I would have laughed at. We were profitable. I didn't really think we needed the external help in that regard. And then, of course, the world all turns around, and we're all locked at home and everything. And just as that was happening, I think, looking back to August, probably that was the big moment for us. We got a good contract, and we had an expression of interest to help us financially from the person we had the contract from, and that was actually Citibank. It's all out there, so there's nothing private about that piece of information. And Citi kind of set us thinking. We were able, not only just because of the money that Citi was proposing to give us, but because of the earnings we've been making through 2019 and at the beginning of 2020, we were able to think bigger. And one of the truths that you learn, obviously, you can, if you're like us as a business, you're very lucky insofar as you're providing effectively a piece of software for what's often called non-discretionary spend. So money that a company is compelled to spend because they have an obligation. Like that obligation might come from a regulator or a government or an internal process that absolutely has to be satisfied. And so we were looking at it and going, okay, we're making good money out of this. But when we started to expand and take on more staff, and this is where we were in August last year, we'd taken on a bunch of new business development people, some people to help us out with our data architecture as a service, for our clients, some more developers. And you suddenly realize, actually, I have all this capacity extra, and it's giving me some breathing space to think about where we could go if we had a little bit more. Now, as a business, we sort of have a lead time, and this is not unusual in businesses that are really transformational for clients. They want to be really sure they're buying the right piece of software. You go through a process, and there's a procurement, and it can take a while, like 6-9 months, before an investment pops out as income. But we're fairly confident, I guess we have to be, that our software is something that people really like. They get on with it, and we had a lot of people moving companies from one place to another and taking us with them. But at that investment we're making last summer, we're looking at and going, okay, well, we will see the fruits of it in maybe May time, or as much as May to August, 2021, so this year. And of course, that's great, because then we'll get more money and then we can invest that further. But of course, as you grow, you kind of realize as a founder, one of the big things as a founder, and these are the epiphanies that founders go through, is that you're doing every job and not your own. Yeah. So you're doing HR, you're doing finance, you're doing legal, and all sorts of other things. And actually, as you start creating more capacity within other parts of the business, so your own capacity to do things as a founder goes down, because you're still doing finance and legal and HR and everything else. Absolutely. So you have to start shedding load from there. And actually, of course, that then isn't really money, in inverted commas, isn't really money earning capacity that you're creating. I've got to have an HR department. We're blessed to have the most brilliant HR manager, and she has just revolutionized my world, and the company's world as well. As we grow, you need these things. You look at it and you're like, it's a bit frivolous. Do I really need it? I can do it myself. But actually, no, you can't. You're not doing anything really well as a founder. You're doing things okay for a small size, and you get away with it. And so we looked at it, and you realize not only you've got to shed load from yourself and stop doing the jobs that you can get other people to do, but as you expand, your horizons get bigger, and the lag between investment and earnings just means that you're going to you can't quite accelerate as much as you want, because you've got to get on someone for legal, you've got to get on someone for finance, you've got to get someone for HR, and they're not immediately going to generate anything for you. In fact, they are a cost. Yeah. So getting ahead of that, and knowing that you've got real prospects, and from our perspective, real prospects as a business, and everyone who sees your software is great, and your limiting factors are the amount of people you can get in front of and the amount of depth you can exhibit in their particular vertical. So it may not be financial service, it could be retail, it could be pharma, it could be government, and so on. And so being able to deploy more talent there is important. Of course, the model that we had was that we earned the money, we invested, we waited for the return, and then we invested again. Private company, no profit, just keep investing, keep investing, keep investing. It was going to take us years to get to where we knew we could be in not so many years, so months. And so the equation is quite simple at that point. You poke your head up and you say, all right, we keep getting these people writing to us and say, would you like investment? Let's start returning those emails instead of just hitting the junk button on them. Because they come in, we must have been getting 20 or 30 approaches a week through the second half of last year. So obviously there was a real appetite to invest at some point last year. And of course, we have well known who our investors are. So the City, HSBC, and there's a VC called Albion, and they're all excellent. We knew that HSBC was really interested as well. And then it became a discussion for us: is do we just keep a couple of institutional, strategic investors who are just interested in our product, or do we look at a growth as well, the growth of us as a business, and we want to push forward into other industries, we want to push forward as a company, we want to expand our software. And so we went down the line of, we've got these two great, huge institutional investors in HSBC and City, and actually we could pick a really good investor who's about growth of us as a business and who wants to push us forward as a business. And so the process then became trying to get under the skin of all of these approaches that came to us over Zoom or Teams or.
Yeah, exactly.
And that's the really hard bit, because I'm sure we would have been in meeting rooms and flogging PowerPoints and all this sort of stuff. In actual fact, we were, literally hopping from one call to another, splitting up, because there are the two fields. We were able to divide and conquer. We were able to look at lots and lots and lots of different angles at the same time and then come back. The great strength in us is that we actually had these two CEOs. And the whole process, of course, I think for the VCs involved and for the institutions was very drawn out. But we weren't in normal, I don't think we're necessarily a normal play. We have a long sales cycle. We're also profitable, very profitable as a company. And we had a lot of choice. So we weren't necessarily playing people off each other, but we were trying to make the best choices for the business overall. And there was some really tough decisions, and some people who I really immensely respect came forward to us and asked us if they could invest. And at the end of it, we whittled it down to a handful, and we made the choices. And we maybe met them twice physically.
Yeah.
And actually, those meetings are great. Having meetings in person, great. They're going to be very valuable, obviously, going forward into this new hybrid world of meetings and Zooming and all this sort of stuff. And we made our choice, and then it was just all about completing things and getting it done, and a big sigh of relief and cracking on with the business and growing our team. And we've even today, right? I made this joke. I think last Tuesday was the last day that we could have lived off our own balance sheet before we start now spending the money ahead. So we can go ahead of ourselves now. So the model for us had never been to overspend. That conservative line, there was a ceiling. Don't go past it. That's what you can afford to live off. Wait for more money, and then you can spend some more. Last Tuesday was the day that I knew for the very first time that I don't think we could afford the business just off our earnings. But that's exactly what investment's about. It's about us now being able to squash a whole bunch of growth in ahead of time, and then see that pop out as massive hyper accelerated profit.
I find a lot of what you've said absolutely fascinating, because there's so many different parts of this, isn't there? There's that journey of a founder, and moving from having everything as your baby and wearing all those different hats to actually then sort of saying, right, okay, I've got to pass this on, and then having the trust to pass that sort of on is a very difficult sort of phase in a business for anyone to be able to do that. Again, then getting used to being comfortable to having been sort of proudly self-funded and profitable all the time, to then recognize now you're going into this and setting yourself with that sort of thing. There's a lot of change there that it's very difficult to sort of get your head around, isn't it, as someone who's bootstrap started a business by the same rationale.
It's not, I don't think we're unsustainable as a company, but we've got to, it's the whole thing about, you've got money in your wallet and you've got a credit card.
Yeah. And
I'm sure you're the same as me. We're in a blessed position that I know that if I spend money on my credit card every month, I'm paying it off.
Yeah.
Then there's the other side. If you go and you spend, if you're lucky enough to have a mortgage, you go and buy a house, and you can't pay that house off that minute, but you've got the house. The house is there. It's around you and nominally yours, right? For a time, someone else is owning that house. The bank owns it with you, and that's the same with investment. But it's a great decision if you're comfortable with your risk profile. Yeah. Taking investment is the same as it's the same as making an investment in buying a house or a car or something you can't pay off immediately. You've got to be confident. You've got to go in with that confident air and say, yes, I will be able to pay this out. And I'm sure that in our industry, data management, data governance, it's right for us to disrupt it. And we know that everyone thinks that we are, the happy disruption that they've always wanted, that they needed that disruption in the industry. And being able to get that message out further and, farther, quicker, while speeding up our development. That's what we took the investment for. It's to allow us to effectively take that sort of mortgage in, pay ahead, but know that in 2 or 3 years we can pay the mortgage off in some regards.
Yeah.
But that moment that that moment of unbelief where you go, oh my God, what have I done? Just get on with it. At that point, you have to reset your mindset and spend more than you're earning for the first time in our entire existence.
Yeah. Look, you've done some incredible, or you've just named an incredible list of investors into a business. and particularly at Series A time. That sort of augurs extraordinarily well for it. Most of the things that you'll see when you're listening to a podcast or reading a report on this is about how companies at Series A can attract that investment and what they need to do that. And we can come on to that in a second. But what I was really interested about what you were saying there is the privileged position that you had there to be able to say, right, we want to choose the right investors. And sometimes that becomes we'll choose the investors who are saying yes to us because we have to. And sometimes, and more rarely, I think it's really interesting to look at that choice of what is the right company to be able to share our values, to take us further forward. What's the right money? Because there is money that comes with fairly heavy chains around it. And there's money there that sort of really allows it to be the right investors and the right teams to take that further forward. I think that's fundamental as to why so little, in the broad scheme of things, the statistics around funding into Series A, Series B is still stacked around the unicorn, as opposed to every single company that gets investment at Series A, Series B becomes a resounding success. And I think a lot of that, in my opinion, is down to the marriage of the investor and the company invested into, and how suited that is. So I think it's a really interesting aspect, and one which I haven't actually spoken about on this show in how many episodes, 150 odd episodes that we've done, to actually think about what the importance of selection of those partners for you. So tell me a little bit about your criteria. As you said there, it was difficult decisions to be making, people there who you would like to have done things with. You've picked 3 who you were very glowing about just now as well. Tell us what that decision-making process looked like for you, because I think that's really interesting.
So I think there's some mechanics, even as a small company, that you need to have in place. I think one of the things that we did right from the very beginning is we got good accountants.
Yeah.
Now, full honesty, they are great, hardworking people. Are they, as we internationalize and we get big, will we stay with them forever? I don't know the answer to that question, but they're really hardworking individuals. But they had the benefit of having been with us since the beginning of the business.
Yeah.
So they'd met us at the beginning, and they knew what our growth plans were. They knew what we were trying to do. And they had context around everything. They weren't being grabbed at the very last second in order to help us. The accounts were in a reasonable condition for a small, private company that didn't need to make a profit, just needed to reinvest well. So good accountants, I think, helped us enormously with this, because not only that, because they had huge context, and because essentially we're friends with them now, they were people we could turn to very early, ask advice from, and they were generous with that as well. The other thing is that because we were kind of successful because we were selling to really big institutions, we'd taken the time to invest in really good legal advice. The legal advice that we got was from a good firm, a city firm aimed at tech companies, and they were helping us with lots of aspects of the business for a couple of years. Of course, there's expense in law and everything else, and I get that, but we were lucky because we were able to afford it when we wanted it. It wasn't something we had to worry too much about, because we were always going to earn money to replace the money we spent. They have a very good M&A function, and we had speculatively talked. We wanted to be prepared for a discussion. We have never, as I say, we're never really 100% convinced we were going to go down this route, but we wanted to be prepared for the discussion. So they generously offered up a very, very smart partner who gave us good conversational advice, but at the same time, like the accountant, started to understand our business. So when we were spinning up and asking questions about what should investors look like, what should we do for this, because they were there and kind of under our skin and we were kind of under theirs, they were giving us really good advice. And I think if you can get advice from lots of places, but there's a certain amount of, we were paying for these guys anyway. And we weren't just, it wasn't like they were trying to get our business. We were already on their books. They wanted to keep our business, sure, and they want to scale up with us, no doubt that. But also the advice we were getting was unbiased. It wasn't someone who was going to take a pound from, giving us this advice. Yes, they got work out of the investment, but they actually really were giving us the sound beginnings of professional advice on our behalf. And that was, for me, a core part of starting this decision process. Looking then at the looking at the institutional investors, well, I'm very lucky to have worked at HSBC for a good long time, and so I was kind of under the skin of that as an organisation. Citibank was a very quick client for us, but the investment team there, the innovation team there, were very, very, very generous with their own advice, and they were like, "Well, you don't have to take it from us, but we suggest you take it from somewhere, and we're going to give you lots of advice on the way through."
Yeah. And they've got a fantastic track record, right, at City as well.
They do. I mean, HSBC team both. I mean, both got fantastic investment records, and they're really good at investing in things that they want to see, not just as a market advantage for them, but as a market advantage for the industry. Getting things like financial crime lower. So we do a lot of financial crime work. Anything that makes financial crime generally better for banking is good for everybody. It's good for all banks. It's good for business. So those sort of investments for all the banks is particularly useful. So we had those two institutions, and we could have just stopped there. But then you do kind of think about the rest of the journey, and then being able to select the right people. So we had a lot of people who are pushy, you just got to make profit. That's we're investing in you to get money out. Be absolutely firm in the profit making angle. You've got a great product right now. Do you need to do that much with the product? Just go sell it harder. Employ 50 biz devs and go ahead and do that. And that felt, firstly, it was nannying us too much, and it was clearly just to generate value rather than immediate value to upsell to the next people so they can get in and out very quickly with a profit. It wasn't necessarily going to create us a sustainable product that we want to have. So we want to be a software company in 5-10 years time. We want our product to be standalone in 5-10 years time. And there's always the offer you can't refuse. But generally speaking, the product is something that we've built to be a product. And so then it becomes what staying power do you have? Can you actually go out to the market and ask enough questions to enough people, and then gather the respect from the investor to say, actually, you are investing in us. We've told you what our plan is. We've told you where we think we're going to go. We're experts in this industry. We're much more expert in this industry than you are. Trust us. And some people we could see were not really willing to do that. Everyone would say it. Well, yeah. And others we could see were definitely along those lines. And this is where the decisions were easy and hard. Like the ones that we felt were going to really support us. And then which ones do you really pick out at the back of that? And that's a thing. It's a very complicated kind of, it's almost down to gut feel at the end of it. But at the end, we had to keep saying to people, and still do, you're investing in us, trust us. Now, what do we get out of it? We get out of it how to be better CEOs, how to be better company builders, how to be more structured, how to take advice. And these portfolios that people at HSBC and Citi and Albion have are immense pools of knowledge, all at different stages to say, yeah, I recognize you were at that stage and we had to do this. And really feel you need to give away this thing. You absolutely have to give away this function. You're hurting the business because although you're really, really great at it, get someone else to do it so that you can do something that makes the business more value, drive the product forward. And I think there's one last thing about all of this is we also wanted to recognize that an investor to recognize we had a really great product roadmap and a really great place that we wanted to take the product to. And for an investor not to get starry-eyed about the immediate profit journey against we have to be somewhere in 18 months to be the world leader that we imagine we are and we will want to be. Part of this investment for me is to get that product turbocharged and to push it forward.
Yeah.
So part of it might be to give away things like product ownership or product management. And actually those are the bits for us, the vision bits that we need to hold dear through this. And then you will get to that point of growth next year when actually the vision now cannot be, we're where we thought we should be. We'll start to bring in the product managers so that they can grow the product. And let us now be the evangelist, speaker, whatever we are going to turn into, thought leader.
Yeah.
But that's a moment in the future. And we needed to find all of those kind of bits of the recipe book. And of course, when you're mixing investors together, you've got to have investors that complement each other. Perhaps people have worked together before, but also who have people in their portfolios that you really respect in terms of how their growth strategy is. Like, if I looked at a company, could I be where they are in 2 years' time? They've gone through this journey. I really like that company. They're in that portfolio. You allowed them to get to the point where they could start doing this thing in 2 years' time. And for me, that's the whole equation.
Yeah, that aspirational aspect of where's the pathway and how have they fueled other people into that, and what are the similarities between how you get with it. Plus, of course, the chemistry of it, I think is really important, isn't it? Is, these people who are going to micromanage you and sort of sit there and push you in, as you've just been saying, down the direction you don't want to go. Are they going to support your vision and be really clear about that as well? And I think it's a really, really interesting part to get right. And I think companies who get that right can absolutely thrive through investment, and companies that don't, end up on the scrap heap. For the companies, a poor investment decision for the companies who've done it is catastrophic, right? And I think that sort of advice that you've given there is clear, concise, well thought out, and brilliantly simplistic in terms of how it's allowed you to then find those right partners to do it. This is obviously celebrating your positioning in the most influential fintechs of 2021. But when we're doing that and we're talking to the judges around that, we're looking at companies there who've got, for that sort of, we can see why with the investment you're talking about, the growth you've enjoyed over the last year in a very difficult year. That's a huge platform now for you to grow as the world opens up again, and very, very exciting around that. But when you're talking about HSBC and Albion and Citi there, they've seen magic in what you're doing. Tell me a little bit about what they were looking at from you, and some of the reasons why they invested into the business.
So there's two, I would think, two quite distinct aspects to this. So Citi and HSBC, I think one of their principal aims is to just make sure that a piece of technology that they rely on and see great prospects to can thrive.
Yeah.
And their aspect is you're strategic for our business, and we see them like that as well. The fact that we have enterprise deals with companies like Citi and so on, it's really important for us for them to know that we're stable as a company. It's not, we can't just have one customer, of course, and so we also get the aspect of, we can tell everyone that HSBC is a customer. We can put their logo on our website. It's allowed now. Mm-hmm. We get really senior executives like, the CDO, Kate Platonova, talking about us in public and putting their name to things. And that's just incredible value for us. That in and of itself is just going to help us be a more sustainable company. And those things, I guess, are, apart from the fact that people like Kate are incredibly inspirational individuals, and they know their business, they're respected because of that. That aspect for these institutions, the strategic investors, is very important. Like, are we a sustainable company? If I buy a 3-year license from these guys, are they going to be here in 3 years' time? They're going to be better. Is the product going to continue to expand? So strategic. I mean, look, Albion are in it for money. Of course they are. But it wasn't just a quick buck. They know, everyone's known it's a 9 to 12 month cycle with us. A pound in to the sausage machine does not give you a sausage straight away. It isn't money in, money out straight away. They want us to make a profit. Now, it's in absolutely their best interests to do that in a way that keeps me and Phil, the other Phil, engaged, and all the staff engaged. It's in absolute their interest to give us all the tools in the box to make that a really great journey, but they want money out of it. Don't be under any illusions. Now, HSBC and Citi, their view is that their name and everything else will, and the product, which they think is really good, will extend, and there will be money at the end of it anyway. But you know what? That's part of the equation, but not all the equation for them. Yeah. Albion are wanting it for the money, and that's fine. I'm good with that, as long as they're it's the right ethic around that money. Allow us to be disruptive. You didn't just employ us as an investment because we had a thing. You employed us because we're disrupting and we have huge prospects. Let us be that business. Yeah. Teach us where we need to be taught, and give us freedom where we need to have freedom.
I think that's a really interesting part, because I obviously speak to a lot of VCs, and if you're asking them about what makes a company investable, they'll talk about management team, they'll talk about scope of market, and they'll talk about products. They're probably the three core areas of what they're looking for. Scope of market is very, very clear with you. That validation and proofing is also another side which you can bring to the party. particularly with the other investors who are attached to it. So it makes it a really safe and inspiring, encouraging bet. So we've gone through that journey. You've had a strong year through all of that. You've managed to attract and win the trust of customers who then wanted to invest at an enterprise level. We've got a big announcement at the start of the year about a strong and big Series A for where it is. That's where we land now at the start of 2021. Tell us what's coming next. What's exciting for the business, and where does this take you?
So against the background of we would have had to waited a little bit to expand further, we now can of course get ahead of our earnings in a cash flow sense. So the crocodile jaws are a year and a half away, where we will, everything will converge again, and we'll be making the money that we need to support ourselves as a business, which is the first objective. For us, we had a plan of software, a very clear vision of where we would like to be. If we had this amount of money, this is where we'd be. If we have this amount of money, this is where we'd be. If everything went wrong, we'll keep the lights on, and which we could have done through the pandemic. That was always part of our worst case scenario handbook planning, if you like. What happens if our customers went away? Well, or we didn't get any new ones, or there was a massive collapse of the whole market, or whatever else. So scrub the bottom one. That's not a problem anymore. Absolutely don't need to worry about just keeping the lights on anymore. Now we look in between the projected line of software that we had planned to put out, and where that dial effectively can be pushed up. Now we can turn the volume up on the, if you like, the developer noise and business development noise, of course, there, and the brand's noise and everything else can all be dialed up. So you'll hear a lot more about us in just generally, because that's got to be a goal for us. We've got to establish ourselves a brand. We don't want to be compared to other people. We want other people to be compared to us, and we're pretty clear that in our clients now that is definitely the case, but we need it to be an industry view. So the old, I love the like a Golf in a car. It's like that hatchback. It's like a Golf. I want everything to be like Solidatus. It's that thing. It's a bit like Solidatus, isn't it? Right? Yeah. It's not Solidatus, right? That's the angle of like a Golf. It's like a Golf, but it isn't a Golf, right? It's like Solidatus, but it isn't Solidatus. That's one goal for me. It's everything's going to be like the Dyson overtook the Hoover in terms of the vernacular kind of thing.
Yeah.
That very recognizable international brand. That's one thing from our, and of course, looking at our product roadmap, we have this 5-year vision. We can get that done in 18 months now. That's mega. So we the compression and the multi-threading that we can bring into our development pipeline. I mean, I'm still a software engineer at heart. I always will be a geek at heart, right? We can deploy so much more now to really disrupt. So our version 5, which may have been like in the first quarter or the second quarter next year, will drop this summer now. And that was a vision that you could see as being like 2 years from version 4, but now it's going to be a year from version 4. And version 6, right? Let's talk about version 6 this time next year, because we've got this stellar vision of where we're going to land with version 6. And actually, we think it's going to be something to mark as an occasion. It'll be a moment for our industry. And I'll keep that to myself for now, as I'm sure you can appreciate. But we've got some really, really, I think, disruptive ideas, and being able to now explore that in a timeline that I'm quite sure will be ahead of our industry peers. That's very exciting. It's intoxicating to think that we might be able to bring that stuff forward and really explore the art of the possible. So we're in that part of the graph now. Above the line, if you had a reasonable amount of money, we're now in the art of the possible, but part of the graph, and actually we can almost stretch our legs to the point where it's not possible to go any faster, not even with more people. It's going to be extremely exciting. And there's lots of good things out there that are driving data. Not only has the pandemic made everyone realize that data was managed badly, and the traditional tooling was exactly that. It's legacy and tradition. We really need to get away from some of it. I think there is an awareness in the world that things just have to change. I mean, whether work from home will be a thing going forward, it's certainly going to be a thing for a lot of the world. That the vaccine isn't just rolling out in the UK and the US, and countries like Israel, it's rolling out slower in a lot of countries. There's going to be this
even mainland Europe when you see it.
Yeah, and it's mind-boggling to think that we may still find countries locked down at the end of this year and at the beginning of next year. And there is definitely a social aspect of, let's hope that the first world countries realize that when they have too many vaccines, they need to get other countries vaccinated and all that sort of stuff. But there's also the whole backdrop of climate change coming in, and as an industry, we are going to be confronted with a whole bunch of new, like almost peer pressure regulations that in the first case, it will be like, well, your supply chain looks pretty carbon heavy. That's pretty poor, isn't it? You don't really need that. To governments saying we want to be carbon neutral in 10 years time or 20 years time, to that actually becoming something that's regulated and then fined against, and actually we're going to close you down as an organization because you just didn't make it. And actually tech plays a huge part in that. And I think we as at Solidatus, we can play an absolutely pivotal role in people understanding their carbon usage. The requests coming for that is probably outstripping nearly everything else we're being asked to have a look at right now. Wow. It's going to be hugely influential, and the tech plays around enabling us. I mean, like, it's good for the world, right? We need to stop the rate of climate change and then reverse it if we can. It's not going to be a 1 year, fix. It's going to be 100-year 100-year marathon. But I think we're well placed to be part of that revolution. So the business is going to go from strength to strength, and as the world throws up new challenges, I think we're in a very good place to respond to them.
I've been sort of sat here with a smile on my face just listening to you, because one of the great privileges of having this show for the last year is sort of been getting access to so many people who are doing special things. And I think one of the things that really energizes me is speaking to people who are that passionate about what's going and their vision and the roadmap and the mission, and just to see that excitement of how you were talking about that. And I'm sure if you watch this back, you'll see it in yourself as well. I love it. I absolutely love.
You're very lucky to be able to do this as well. I mean, it's great to be able to talk to people and see, because it's been a dull time. It's been a depressing time, and I think there's so much opportunity and happy spirit out there waiting to bubble up and meet again in person in this hybrid world and get out there. And I can't help but be optimistic about a lot of things, and I'm very optimistic that we as a piece of software can make a difference as well. I think that's being borne out by the way that we're seeing people consuming us and saying, oh, actually, there's a good play for reuse, there's a good play for efficiency, this is a very operational tool. And we need more softwares like that kind of style. And that's the good part about disruptive fintech. And some of the places we've been led over the last year, actually, fintech being brought into places like the NHS. And healthcare, the tools in the armory, that the horizons that other industries have got to expanding their data use, they need to turn to the fintechs who've done it really well. Yeah. And then kind of the opportunities for us to spread through these different sectors now, to take these learnings with us, is just it makes me immensely optimistic that we will emerge from all of this as not just as a stronger company, but as a stronger economy and everything else.
I absolutely agree, and I've said this on numerous different occasions. The sort of pleasure of being in this sector, this time out as opposed to 2008 is very, very different. And the ability for the fintech space to be able to cross pollinate, as you say, and sort of take some of its lessons and allow that to spread, it's kind of been very different from where we've been sat before, where innovation technically has sort of outstripped the financial markets. If I go back to 2000 when I started, you would look at the most disruptive and innovative technology being within the banks, and the banks would be the mecca for the best people in the world to want to come and work in. Over time, that innovation stagnated, and you saw other industries rapidly overtake in terms of how they expanded, particularly around digital tech, the digital tech and other sectors sort of really grab the nettle. I think this time out, it's been fascinating to see, genuine and true and productive innovation. As I say, I've spoken to so many people who've allowed you to feel that optimism, through very difficult times. And we set this up right at the very start. How are we going to shine the light on people who are turning the negative into a positive and celebrate that, as opposed to just sort of be embarrassed about it, which I think people could, the empathy factor is really important with everything that's been going on in the world. But you're right. The chief economist Andy Haldane a couple of months ago called it the economy a coiled spring, And I think, with every company I'm talking to and have been talking to over a very difficult year for a number of businesses, I've seen a number who've grown by 100% plus. I've seen a number who've endured the last year, but I've seen almost everyone be very, very positive and optimistic about what's coming next. And that to me is extraordinarily exciting. And it's businesses like yours, I think, that have been at the forefront of that are talking with passion and enthusiasm and solving genuine problems and allowing them to think clearly around how technology can really take us to the next level from this. And companies are open to it and thirsting for it and looking for efficiencies. And there's so many efficiencies, a whole can of worms that I know we're out of time with at the moment, but I could be speaking to you about for ages. And there's more stuff that we need to cover on another show for it. So I'm sure you're going to be back on it again in the not too distant future. But yeah, listen, uplifting, fantastic. So excited to see where you go over the course of the next year as well. Congratulations on being on the list again. Thank you all for watching. We'll see you soon on another episode of Fintech Focus TV. Thanks so much.